So, good evening, guys. Good evening. Good evening. Good evening. All right. You guys are welcome. Hope you are all good. So, in our last class, we said that we are going to be talking about currency pairs. We said we are going to be talking about currency pairs. You understand? And in the Forex market, currency pair is one of the first study or first knowledge you should acquire as a Forex trader. You understand? You should understand the currencies that are being traded in the Forex market. You understand? When you understand these currencies, then you know how to use them against each other. So this is what we are going to be talking about today, currency pair. Or let's say the Forex market introduction and currency structure. You understand? So this is what we are going to be talking about today, but mostly currency pair. So we come the Forex market. The Forex market, foreign exchange market, is entirely built on a tug of war between two currencies. You understand? You see, this is just grammar. When I read this, I don't just, when they say tug of war between two currencies, what I normally say is tug of war between two countries. You understand? Because every country, their economy, as I said before, is what moves the market. You understand? So there is no currency without a country. You understand? There is no currency without a country. And there is no movement in any country's economy or in any country's um, um, what is it called? Trading channel or economical standard without their performance in the economy. You understand? So why I said I call it a tug of war between two countries is because is actually a country against the other. It's a country economy against the other country economy. You understand? So if the country economy is good, their currency will be good. If the country economy is bad, their currency will be bad. You understand? So this is not just about tug of war between currencies. This can also be tug of war between countries. You understand? But let's have it like this. It's built on a tug of war between two currencies. You understand? When you trade Forex, you are simultaneously buying one currency and selling another. You understand? So either you're buying one currency or you're selling one another. And in this process, for you to buy a currency, you feel that, okay, the country's economy is strengthening against another. This is the reason why you buy. And for you to sell, you feel the country economy is weakening against the other. This is the reason you sell. So as a trader, you're standing between one country and the other. So you're looking at their loopholes. You're looking at if they have strength, if the economy is good, or if the economy is bad. You understand? You're looking at the statement of what happens in their country. Is it positive or negative? So between this is where you take your decision and take advantage of whatever result that comes in. You understand? So here we talk about the anatomy of a currency pair. You understand? Every currency pair is written in as two. They are written as two. You understand? This means as they are written as two, first three-letter code separated by a slash. You understand? They are written as two. When they say it's written as two, it means these two, euro, USD. You understand? As it's written Euro USD, you understand? Then when they tell you about written as 3 letters, they mean 3 letters for each one is represented by 3 letters. Then each one is represented by 3 letters. You understand? So this is what it means. You understand? So now, each of this letter now, you understand, we have is written as 2 and 3 letters 1. So the first letter you see, the first one is the base currency. You understand? The first one you see is the base currency. You understand? This is why he said the base currency, what it is. You understand? The first currency listed in the pair is the base currency. Just look at this place now. I have Euro USD. You understand? So this Euro here stand as the base currency. You understand? Euro always stand as the base currency when it's written like this. You understand? The role, it acts as the basis of the trade and always represent one single unit. Example, in Euro USD, you understand? The Euro is the base currency. You understand? That is the Euro is the base currency here. All right. So let's keep it up. Please kindly indicate on the chat if you're getting what I'm saying before we proceed. Indicate on the chat, on the group chat, kindly indicate before we proceed. Kindly indicate on the group chat before we proceed. All right. Just type yes if you're getting what we are saying. And also indicate if you're seeing my screen very well, because I don't really know. I think it's okay. All right. So the quote currency or counter currency, what it is, you understand? The second currency listed in the pair, you understand? The row, it tells you how much of this currency you need to buy exactly 1 unit of the base currency. You understand? If the price of Euro USD is 1,200, it means 1 euro is worth exactly $1,200. You understand? Now, which one is the quote currency? In just as we said in the last base currency, you understand? In currency pair, the first letter is the base currency, while the second letter is the quote currency. So if you're trading, for example, Euro USD, you understand? Automatically, Euro is your base currency, where your USD is your quote currency. So when you click on buy, when you click, that is the trading rules. Now we are talking about trading rule of thumb. When you click, wait, I want to explain something to us first before we proceed. I want to explain something so that you guys will get it very well. Very well, I'm coming. I want to explain something. Just hold. Okay. Okay, because I don't want to skip anything. I don't want to skip anything. All right, guys. So when you click buy, you expect the base currency to strengthen against the quote currency. When you click on sell, you expect the base currency to weaken against the quote currency. You understand? So this is the same thing I told us about on the start, that this is actually a tug of war between a country and the other country. And you remember, every currency pair represents a country. You understand? It represents a country. So trading rules of thumb, you understand? When you feel that a particular country economy is bad, so it makes you feel like, okay, it's weakening against the other. When you feel that it's strengthening, you understand? It makes you feel like, okay, it's going to do better against the other. So when you click buy, you expect the base currency to strengthen against the quote currency. When you click sell, you expect the base currency to weaken against the quote currency. So when you have Euro USD on your pair and you buy, this means that you expect Euro to strengthen against USD. You understand? So this is what he's talking about. So the global currency symbols, ISO codes, you understand? Currencies are designated by standard 3 letters ISO code. You understand? The first 2 letters usually present the country, and the third letter represents the currency name. You understand? So this is trying to tell us that if you have Euro USD, you understand? If you have Euro USD, the EU represents Eurozone. You understand? The EU represents Eurozone, European zone. You understand? Then the arrow there represents the main currency. You understand? Just like the same thing when you have USD, you understand? The U represents United States. You understand? The U and the S represent United States, while the D there represents the currency, which is dollar. You understand? So that is what he's trying to tell us. Well, there are over 150 currencies in the world, the heavy hitters that dominate global trade volume, including standard measure symbols. You understand? This is trying to tell us that we have over 150 currencies in the world, and not all these currencies are listed in the Forex market. You understand? Most currencies are not qualified. Even those that seems to be qualified and being listed in the Forex market, most of them, when you see them, you cannot even touch them, cannot even trade them, because there is no movement. They don't have any movement at all. They are just there. You understand? So this is what is trying to tell us. But among all these 150 currencies, there are those that dominate global trade volume. You understand? They are standard. They are the major currencies that has been traded in the Forex market. You understand? Global currency symbols. You understand? So these are the most currencies that has been traded in the Forex market, and their nickname also. You understand? The USD, that is US dollar, United States, we call it green buck. The euro, Eurozone, that is Europe, we call it fiber. Then the GBP, British pound, United Kingdom, we call it sterling or cable. That's their nickname. So and so forth. So all these there are their nicknames. You understand? So that is it. We have other ones here. All these are their nicknames. So all these things, just as I always advise us, after each class, maybe during the assignment session, just go back and research about what we taught about. You understand? Just don't just sit and just, okay, take what I said. You know, challenge me. Do a research. on everything so that you have wider knowledge of what we just discussed about. You understand? Because all these are very important. As a forex trader, you need to understand these currency pairs and the ones that have been mostly traded in the market. You understand? You need to understand them all. So that is it. Then, so in forex market, we have three major currency pairs. You understand? This is why we have categories of currency pairs. In forex market, we have three major currency pairs or three categories of currency pairs. In the market, pairs are divided into three types based on their trading volume, liquidity, and how easily they can be bought, sold, and spread. The transaction cost. You understand? This is trying to tell us that we have three categories of currency pair. You understand? And these three categories of currency pair have their way, the way they react to the market. Most of them react differently to the market. You understand? Some, their trading volume is higher. Some has higher liquidity. Some you can buy and sell immediately. Some you cannot. Some the spread is very large, like you have a wider spread. You understand? Some the transaction cost is also higher. You understand? So we are focusing on currency pairs. You understand? Later we are going to be discussing about all this liquidity, spread, trading volume, all this around it is they are under liquidity, spread, what else? Trading volume. You understand? They're under technical analysis. That's where you understand liquidity, spread, and cost of transaction. All those things. We are going to discuss about them, but we are focusing on currency pairs now. So please indicate if you're understanding what I'm saying so that we can proceed. Kindly indicate. If you get what I'm saying, kindly indicate, please, so we can proceed. You understand? So remember, we said that currency pair, we have three categories of currency pair. You remember that, right? So this is what we are talking about. So the first one here is major currency pair. These are the most heavily traded pairs in the world, making up roughly 85% of total forex market volume. You understand? So major currencies are the currencies that's been traded. Like we trade more of this currency than others. You understand? A major pair must include the US dollar, USD, on one side, paired with another dominant global currency. So you all know that major currency pair include US dollar. You understand? So just imagine we have all the currencies in the world. You understand? And the whole world, I don't know, is when you want to count countries that does not transact with US dollar, you understand? You can check. It's rare. You understand? Country that does not transact with US dollar. So this is even more reason. Just whatever we are talking about in these major currencies, just relate it to your daily life activity, business, and all that. Then you figure it out. You understand? So that is it. So, and this major currency, we have 7 official major currency pairs. 7 official major currency pairs. You understand? This is where you have Euro, USD, GBP, USD, USD JPY, USD CHF. You understand? So that is Euro US versus USD, British pound versus US dollar, JPY is Japanese yen. Then CHF is Swiss franc, that's Switzerland. Or USD is Australian dollar versus US dollar. So, and so forth. So that is how it is. So you can still Google it and you get the list of all this to study more about them. So the second one is minor pairs. You understand? So they have healthy liquidity and demonstrate spread, but they can experience larger / more volatile swing than the major currency pairs. You understand? So what this place is trying to tell us is that you see major currencies. Let me remind us something. You see major currencies, they feature high liquidity, smooth technical movement, and the lowest spread. The spread is lower and the smooth another. That is the first one, the major currency. But the minor currency pairs, minor pairs commonly called cross pairs, where two major global currencies are traded against each other. But the US is completely absent. You understand? Minor pairs, commonly called cross, are pairs where two major global currencies are traded against each other, but the US dollar is completely absent. Let me show you. So these minor currencies, they have healthy liquidity and moderate spread, but they can experience larger or more volatile swing than the major currency. You understand? So this is trying to tell us that this currency, you understand, they experience larger volatile swing, you understand, than the minors. You know, remember the major, they tell us that, okay, major has a healthy, technical, and smooth movement, you understand. But when it comes to minor currencies, reverse is the case. So the popular example includes Euro, GBP, that's British Pound, JPY. So just know them, you understand. These are the examples of minor currencies you can find, you understand. Then the third one is exotic pairs. The third one is exotic pairs, you understand. Remember, when you are being asked the categories or three categories of currency pair in the forex market or forex trading, you understand. The first one is major, the second one is minor, the third one is exotic pairs, you understand. So these are exotic because they aren't traded heavily on a global scale. They have low liquidity, massive spread, and extreme volatility, you understand. They are highly sensitive to sudden geopolitical event and country-specific news, you understand. So this exotic now, just as I said, when I was trying to explain to you guys what I mean by tug of war against one country and another, you understand, this is what I mean. You know, look at the down of this, you understand. The currency under this exotic pairs experience highly sensitive to sudden geopolitical event, you understand. If there is issue, election, uh election, change of even change of a head of treasury, uh, um head of treasury personnel, or what should I say, just name it, any little event in a country can actually affect this currency under exotic pairs. You understand? Because they are not that strong. Mostly they are not being traded mostly because of the swing and the effect and massive spread. When you start trading, you notice it. You notice that some currencies have this wide spread that when you click, let's say you're taking like a one lot size on the trade and you click and you see wide spread. Before your transaction will meet up to the spread size and start making you profit, you must have been gotten to, in fact, I don't know how to put it. You guys will see it when you get there. I don't know. But just state, click on the comment section if you're getting what I'm saying so that we can proceed. I said comment section. I keep on calling comment section. Click on the, oh shit. Sorry guys. Click on the, just type on the, this thing. What is it called? Type on the, please type on the group chat. Please type on the group chat. Please type on the group chat. If you're getting what I'm saying, type on the group chat, please. Please type on the group chat. If you're getting what I'm saying, please type on the group chat, please. Please type on the group chat, please. If you're getting what we are saying, please type on the group chat. Let's proceed. All right. So these are example of exotic pairs. You understand? You will know about USD / ZAR. ZAR is South African rand. MSN, that's Mexican peso, Trill, Turkish lira, and the Singapore. And so if you relate this to the company, to the country's performance in the world and everything, you have answer to all this we are discussing. You understand? You have answer to them. Not just only country's performance, to business transaction. You understand? Is very rare you go to this thing. It's very rare. You come to Nigeria, for example, and you see people trying to buy products with African, South African currency or Mexico currency or Turkish currency, you understand? Or Singapore or Turkish. So this will tell you, you understand? But check it. When you travel to Nigeria or other African countries or other countries in the world, Asia, anywhere, you understand? It's more easier for you to see US dollar, euro, pounds, you understand, than you see most of all these currencies listed in exotic pairs. You understand? So this alone will tell you what we are talking about currency pairs. So in all, you understand? Let's discuss about bullish and bearish market. You understand? Because this is part of, is actually part of, currency pair, under my currency pair, that people don't really understand. You understand? Remember when we said before that when you click on buy, you feel a particular currency is strengthened against another currency, and when you click on sell, you feel a particular currency is weakening against the other currency. You understand? So that is just, should I say, a normal layman understanding on the forex market or in the forex market. You understand? In the forex market, the main term we use to illustrate or to explain more about buying and selling is bullish versus bearish market. You understand? So bullish market in this sense represent buyers. You understand? This is why he said when you are bullish, you are looking to click buy because you're expecting the market to go up. You know, so expecting the market to go up means you're expecting the market to have more strength against the other currency. You are running with the bulls driving price higher. You understand? So in the forex market, you can have last time we discussed about who moves the market and all that. You understand? So in this time now, okay, let's look at it on let's use this thing. Let's use a sentiment analysis to illustrate this. You understand? So when you are trading in the forex market, let's say under sentiment analysis, you understand, you might have over 1,000 people with the mindset of, or the expectation that the price is going to be bullish, that the market is bullish, that the price is going to go up. You understand? So when you join this kind of people, that means you are bullish in the market. You understand? We call them bulls. You understand? So when you join this kind of people, you're expecting the market to go up. You are running with the bulls driving price high. You understand? So all of you're joining the remaining 1,000 plus to drive the market high when you click on buy. So this means this is your guys' expectation. So on the other hand, we have bearish, that is like sellers side. You understand? So when you are bearish, that means you're on the seller side. When you are bearish, you are looking to click sell because you expect the market to slide down. This, you expect the market to weaken against the other currency. You are with the bears clawing price down. You understand? It is the ultimate foundation mindset for navigating that currency tug of war. You understand? So just the same thing. You cannot be like 2,000 people who expect this market to come down. So you are keying in under the sentiment. You understand? You are keying in under the sentiment, that the market is going to be bearish, is going to weaken against the other. Just like what we explained. If you are trading Euro USD and you're on a bullish side, that means you are going to click on buy for the market to buy more higher. You understand? And if you're on a bearish market, you're going to click on sell for the market to slide down. You understand? So this is what it means. You understand? So when you are in a forex trading or as a forex trader, you have to understand that buy or sell is not just the Finnish language for forex terms. You understand? You should understand bullish versus bearish market. You understand? So this is what we are talking about. So thank you guys. Thank you for watching Opportunity Mindset. Like and share, and see you on our next class. Last time I explained our next class, I gave us what we are going to be discussing before the end of the class. But this time, I will not be telling us what we are going to be discussing. And I will drop our next topic on the group chat, on the WhatsApp group chat. You understand? So from there we can proceed to our next class. But anyway, guys, thank you. Just like and share, subscribe, and see you on the other side. All right. Thank you.